what it does left of price also, right? So you got liquidity being grabbed here. You got last sell block, and there's two candles here before the buy. So it took liquidity left, criteria number one, and took liquidity number right, criteria number two. And look, people would see this and look at, oh, I think the reaction is coming from somewhere here, or the imbalance. It's not. Do you want to see what I'm saying? It's not. The focus, the thing is that's going to shift is where the banks were involved last, right? And that's that point here. You guys follow me so far?
Yeah.
Yeah. And that becomes a pretty tight trade. How many pips? 4 pips stop loss. 4.4. Yeah. Now, why I'm looking, and the thing is, we weren't wrong. Obviously, you guys know yesterday we took buys up in Asia. I couldn't get in this trade because I was out, but some of you caught the sell and then we caught the buy, right? Because it mitigated again. Last sell, the buy, like sell to buy zone. Within that, you've got minor supply zones, right? But you've got liquidity being captured here left, which is key. Can you guys see that? Yeah.
Yes.
Liquidity push through, break a structure. So it's a twofold definition of what an OV is. Liquidity push, grab of liquidity to the upside, i.e. a BOS to the upside. And then we've just shifted nicely, right? Now over here, it was a good idea, to be honest, because it's end of day. You've got the daily cycle closing here, and it's a nice sell. The problem here is if you, like me, sleep in, like the time zone in Asia, like I'm in bed now, like I'm exhausted, but I'm asleep. So you can't manage this position if you're in a sell here unless you stick to a 50p TP. Do you know what I'm saying? Yeah.
Right.
Or a 70 pip TP. Like most, if you measure most Asian range boxes for gold, I think there's 50 to 70 pips. Okay, so on the safe side, if you're going to go to bed, and this is a learning part I learned from yesterday from this trade, see 40 pips. If you're going to be here and you like know that there's a possibility you might pass out or fall asleep, what you should do is just set a 40 pip hard TP or 30 pip to be safe. See what I'm saying, guys?
Yeah.
Because the thing is, if you wake up and then this thing, and like when you first wake up and you're asking your brain to make trading or technical decisions, like it's a recipe for disaster, right? Yeah.
Yeah.
It really is, right? And obviously there were some shifts here, but I don't think the last order flow leg shifted. So you had external pushback. This is all internal pushback. There wasn't a last shift. I mean, there was, but this block created liquidity and pushed higher. But the reason why we should have been long-term, I mean, you guys know I've been long-term buys anyway. I broke this down for everyone from, we've discussed this yesterday as well, 1720, we had the buys here anyway. Obviously this was reaccumulation. Now you've got explosive push. Yeah.
Yeah.
Yeah. So from a higher time frame, like scope that fundamental picture, right? This is why you got to have US 30 in one of your pairs you trade. It's a must. The reason is, as I explained yesterday, when this thing goes up, you have pound and yen strength because the banks are liquidating the US dollar portfolios and moving into the stock market. Yeah.
Right.
So you gotta have it. And if the thing is, this trade that we executed here yesterday to perfection, and remember what I said to you guys yesterday, look, at the zone of manipulation, when people are being induced to sell, you've got a sell-off happening here. See that? This was the fundamental news yesterday, right? Price came up here, sell-off, right?
You almost took my trade out of the picture. That's so.
This one?
No, down. Yeah, because I was protected in the bottom.
You're protected right here or there.
Yeah.
Yeah. You're still in this trade, right?
Yeah, I'm still holding.
Yeah, yeah. And again, guys, like, look how beautifully it works out. And we know it's going to come here. Now, the thing is, there is a possibility that this flip zone can shift the high. Okay, there is a possibility. I'm not saying it's just probabilities, right? But the thing is, to enter here, we're going to have to use our criteria again. We can't just jump in like Bugs Bunny on some of the trades we do and be like, oh, because we are structurally bearish now, aren't we, group? Yeah, this was bullish structure here. Bearish, right? Now in bearish structure, aren't we? This is one impulse from the higher time frame.
Sure.
Yeah, see that? On the 3 hour, this is a 3 hour low. 3 hour low. The reason why I started doing more team calls with you guys in the morning is, guys, like when I trade by myself, sometimes I get foggy about my ideas because you can't talk them through. Yeah, you see what I mean?
Yeah.
It's a passive process, right? But if you can, I think our NAS trade is dropping as well. Lovely. Look at that. Isn't that beautiful? Yeah. This is why structure is the cornerstone of your trading plan. Without it, there's no framework for what you're doing. Okay. Now, in the next few months, right, I'm gonna start reading up a lot more on my fundamentals because I think from a technical standpoint, we're all working on our weaknesses and strengths, right? Structure for me, right? I've been working on that quite considerably. Obviously, now we're trying to become like real professionals at this field. So I think if we can have a deeper understanding of the fundamental picture, it will drive our technical knowledge to even greater heights. Because like I said yesterday on yesterday's call, the yen basket, as I mentioned, could collapse and take that. I said that right, guys. Remember that?
Yeah.
Yeah. And I said we were on this peel, on this coming here, and there's liquidity here, right? Now, obviously, I was tired at the end of the day. I started doing some stupid stuff with GJ. To be honest, I had a pretty nice entry when I show you guys GJ at from yesterday's US session. Like, where was my entry yesterday? I got a pretty nice snipe here. Yeah, and guess what? At the end of the day, because I'm exhausted, I try to do some really stupid stuff here. Yeah,
Try to sell it.
yeah, I tried to sell it, right? Because the thing is, I was starting to ignore the fundamental backdrop that obviously the yen is tanking for many reasons, right? There's a fundamental reason why the yen is tanking. Google it, I can't exactly remember what, but you know the US 30 drivers to the upside, which is gonna do what?
Weak the US dollar.
Yeah, yeah. So it's gonna, yeah, we can reduce the US dollar and increase the yen, right? So obviously I'll put this out here on the right here because the thing is, from going on yesterday, I think everyone needs to realize I'm not sitting here pressing buttons for fun and sending trades ideas for fun. Trades are being taken by myself and they've been done in real time with you. So I'm literally in the trenches with you guys all day long. So that's literally there to show it. I don't really like doing it, to be honest, because the thing is, it's not really needed, I think, at this stage. But sometimes I think it's nice to show that, look, I am doing this and it's the same trades that I'm showing you guys. There's nothing like going on that you guys are not doing yourself. Do you know what I mean? Obviously, I'm not, and obviously I'm talking about the mistakes I'm making in real time with my own analysis. Because as I broke down with you guys yesterday, GJ, I said, is going to go print that weekly new structure point, right? Somewhere here, 160. I was looking at because of all the fundamental pointers that are driving this at the moment. And obviously US 30 we're looking at as well. Yeah. Yeah. Just shows I'm human, right? We'll make mistakes all the time because still a young trader, still learning, still trying to refine my craft, right? But you can see on the call with you guys now, how many trades have we just called out live? We're just taking gold, look, ripping. And obviously NAS, I'm expecting this to drop as well. Yeah. So this stuff does work, but obviously it does help me that you guys are on the call and we can talk about this stuff together. Okay. Yeah. So what are we talking? Which pair were we looking at? Gold, or was it US 30?
Was US 30?
Yeah, okay, yeah. So what are we talking about with this US 30 trade? Yeah, obviously 4 hour at the moment is bullish. Yeah. So we're gonna print that lower high to lower low. Okay. So right now there's a manipulation zone here, but when it comes here, and again, these areas are just, they might give reactions, but because people are going to be enticed at imbalances, but you really want to look at this zone here, okay? So this is your 30-minute block. And actually the 30-minute block, actually, the reason why I'm covering all of this is because of that H4 liquidity void. I do want a slightly wider zone for this, but so if you got M15, then the last buy zone before the sell-off came, and again, like, you know, you're in the right zone because for a true order block, right, or an institutional structure or point of liquidity, all it is really, right, when liquidity was injected to take out like equal lows left and break structure right. This, and again on lower time frame, this looks like internal architecture, but if you go 3 hour, this is one push. Can you guys see that and appreciate that? Yeah, it's one push, right? Yeah. So yeah, so this is definitely the zone to focus in on, and obviously liquidity was squeezed through from this portion through here. Okay, so this will definitely be the zone. M15, you can refine the zone. Probably this is the last buy to sell zone right there. Yeah, somewhere here the magic will happen. Okay, you then got 15 minute, 10 minute doesn't really do anything, so 15 minute. Then you've got a zone right there. Okay, there we go. You got a 5 minute zone right here. Okay. Yeah, when I see now this, how many pips is 20 pips? I mean, you can refine it further. I mean, you should always look further down because your job as a trader is to be an analyst, and like you can refine that zone a little further. But I like the M5 zone a little better because on this M2 is showing the black candle pushing further. The M5 zone at the moment is a bit cleaner. Can you guys appreciate that?
Yeah.
And then we look at M2. Let's look at M2 just for interest's sake, and let's see if there's something else happening here. So M2, you see an IFC sitting here, so that's important to mark out. That's probably going to be the target, guys, in all honesty. This M2 zone here. Okay, this zone here is going to be the target here. Yeah. Bang, bang, bang. There we go. Those of you guys that joined just now, we've been taking some trades together. We've been talking about NAS 100 that we broke down yesterday. We're in a sell right now on this. I just broke down gold here for you guys, how you could have got another entry here. Yeah. And now we're just working on our US30 framework when the sales do come. So yeah, you got a 2 minute zone, a 10 minute and a 15 minute zone. And obviously right now, our fifth, we're creating M15 higher highs and higher lows. So I think it's good for us to label that we've been starting to create M15 higher highs and higher lows. M15 is bullish. So we should get another M15 drive to the upside. And obviously we're going to continue to make structures here on the right to push up. Yeah. So order flow here is really bullish at the moment, guys. There's no protocol here, is there? Can you guys appreciate that? For a shift to the downside. And you know, from a technical picture, it shouldn't really happen anyway. Okay. But I think one thing we can all do as a team is I do want everyone to take a bit more interest in the fundamental picture. Yeah. Because if you hear something on Bloomberg or read it, and obviously your technicals are aligning with it, it will give you a longer term swing bias for that trade. Yeah, because the only way to swing GJ, I mean, from this point, if you got in to where it's going now, you would have had to have some fundamental underpinning to that reasoning as well. Yeah, because purely holding them from a technical standpoint is psychologically difficult, right? Agreed? Yeah.
Agreed.
You might see the technicals that it's gonna got liquidity here, but psychologically, it's hard to handle that that thing. Yeah, you guys make sense so far? Yeah. Psychologically, it's very difficult to handle that trade. But if you have something that tells you, right, the yen is getting weaker, then what's the result of that? You're more likely to hold the trade right through the swing.
Yeah.
So it's adopting our technical framework with the fundamental principles that banks and institutions trade on, and they use to trade. You guys follow me so far? Yeah.
Yeah.
Because the thing is, guys, like I'm no longer interested in like all of this amateurish kind of trading and all this. I really want us to push towards a professional level to the point that we can hit 20, 30, 50K a day. Yeah. Now it might seem like extortionate, right? But the thing is, guys, it's only 11 in the morning. There's already 2,000 floating here. Yeah. There's nothing stopping this if the lot sizing gets bigger because our understanding or appreciation of the markets improves slightly better, that now that looks like 17K by 11 a.m. Yeah. What's stopping us? Yeah. I was watching this video that I sent you guys on. This guy's channel is superb, by the way, for psychology. I found it by coincidentally because I'm trying to improve. Where did I post it? Not this guy. There's another guy. I'll post it for you guys. But did I post it in the wrong bit? No. Did I post it on the general chat? Well, not posted at all. But anyway, I'll find it and post it for you guys, right? But you guys, we are like, I'll refine your technical approach and I'll refine your psychological approach based on the lessons I'm learning. Yeah. Because there's lessons every day, guys, even on the gold, like here over here, right? I know there's a possibility that we could crack to lower zones, but we forgot that this was such an explosive push through. We're probably not going to get a deep retracement, right? Yeah. But we got to account for our fundamental drivers. And I think that will help the psychology immensely. And you can see NAS 100 is starting to die. Yeah. You guys follow me? Yeah. And again, guys, appreciation of structure here is paramount.
This is crazy.
What, your mentor can call trades live like that? Yeah.
Exactly. I'm watching it dying, and you over here watching all the pairs, and this is dying.
To be honest, it helps. I mean, guys, sometimes I honestly struggle when I'm by myself because, like I said, right, I can be on the charts 10, 15, sometimes 20 hours a day. Yeah. And the thing is, if you're by yourself doing it, then it's one, a very draining process. And obviously then your mind's not really working to the sharpest like ability it has. Agreed?
Agreed.
Yeah. It's a passive process all around. But again, look, I'm following, and guys, following to all our processes is still not second nature for me, right? I'm still working on making it second nature, but you had liquidity grab. So you had trend line liquidity over here. And then you've got internal liquidity being grabbed and and obviously we came into the last buy to sell block, and now we're going to get a collapse. But the framework here is structured. Now, somebody, I think, who messaged me this morning that they were struggling? Was it Finn? I think you're on the call. Was it you? Somebody messaged me. Oh, delay. Yeah, somebody messaged me. I hope he was hoping they won't be on the call. But if you're struggling, guys, to put everything together, yeah, okay, you got to break it up. Because the thing is, the first part, because the thing is, if you come on these calls now, obviously I'm going over structure and briefly, right? Because we look at structure within trades. If you're struggling, you got to dissect that. Like, which portion of it are you struggling with? Like, do you have a grasp of structure to begin with? Do you have a grasp of how you refine your higher time frame zone like we did over here? Okay, guys, this for me is one of the hardest, most challenging bits of the POI refinement. It is, right? Because it's the one everyone screws up. Okay, yeah,
right.
It's the 1 hour zone, which was there last buy. Then we refined it to 30-minute. Then we refined it to, I think, 15-minute. Yeah, 15-minute zone. Okay, that was a 15-minute zone. I should probably label this 15-minute zone. Yeah, so the 15-minute zone, and then we got 10-minute zone, etc., etc. And then you refine it until you get to the last bit, price action. But then you still don't execute on that POI. You got to go lower time frame and see how price is interacting with your zone. Yeah, right. There's one thing I still FOMO in on. Sometimes I take these aggressive entries because I'm like, it's based on structure. But the thing is, you need to really wait for that confirmation before you put your capital on the line. Okay.
Right.
Yeah. Very important. Very important. But it got me thinking. Yeah. Because the thing is, yesterday, kind of did not really bum me out because I'm like, I'll hit more trades. But I had a really nice entry on GJ here on the buy. But why? And I really had to journal this morning. Why last night was I looking for sells at this point over here? If I'm in buys from, what was it, 1540? Where was I in buys from? 1440, I think. Here, yeah, 40. So I was on the day's close. I was floating 40 pips, I think, on 3 or 4 lots of volume, right? And over here, I got sucked into this POI over here on the right, on which is based on the higher time frame daily, even though I know there's Asia high liquidity sitting here, Asia high city, so there's a bunch of liquidity sitting here. So I see that. And yet my mind decided to go into weird mode and start selling the market here. Yeah, there was an external shift here and there was an internal, right? If you see the flow protocol, there was only an external shift. And there was an internal shift here, but there wasn't the final shift in order flow. Can you guys see that and appreciate that? Yeah. There was only, look, when this comes down here, this shifted, external, push back up, right? This was the last sell before buy, internal, came back here, and we just screamed through. There wasn't a shift there, was there? If there was, different story. Yeah.
Yeah.
But there wasn't. There wasn't. So, and architecturally, and this is why, at the end of the day, trading is hard, because the problem is not because you don't know the trading plan, it's because you can't, you're just too tired to label everything, right? Yeah.
Facts.
Like, this architecture was still intact on the M10 time frame. So this was an M10 higher high. Yeah. And this was an M10 higher there. And yeah, it did, guys, honestly, it made me sad this morning looking at that trade, because it's just, it's frustrating, right? Because you're reading the market correctly, you're reading the fundamental drivers of that pair correctly, but for whatever reason, psychologically, you're making the wrong decisions in the moment. Yeah, we spoke about this yesterday, right? Agreed. Yeah, I said don't buy yen on the call. Remember?
Yeah.
Yeah, and guess what I was doing? I was trying to sell it there. Yeah, so what was the reason for that? So I need to reevaluate my position on that. So if GJ is going up, and we know the yen is tanking considerably because this is starting to make a new weekly high, right? And obviously, and the reason why I said I'd potentially hold off, let me change on, I'd potentially hold off on selling Euro USD here, right? The reason for that is because what did, from a even a monthly standpoint, yeah, if you look at monthly structure, right, was this not a new monthly higher high? Agreed?
Agree.
Yeah. Monthly higher high, right? It should have pushed that high, created what, monthly lower high into monthly lower low. So really, from a monthly standpoint, if this is a monthly lower low, because the weekly's printed it, we should go and hit that monthly landmark, right? Yeah.
Right.
In any case, if you then slightly go, so that's from a monthly perspective, if this is a monthly lower low, it should go and create a monthly lower high. That's how the market works. Yeah. And you know, you've got manipulation zone in the middle here, which they spike through. Yeah. Can you guys see that? That's a bit of a manipulation zone into what flip zone, right? So there's a fractal version of that model working on a high time frame. But if you even look on weekly, and I spoke about this on the breakdown on Euro USD at the end of the start of the week, the only problem was I forgot that we were actually building liquidity here. I hadn't seen it, and that's the problem with that, is because I don't look at Euro USD enough. But in any case, what was the zone we tapped into? Flip zone and imbalance, right? Agreed.
Yeah.
Inducement zone, right? So at this area, if we have an internal liquidation and grab of liquidity into POI, which we did, we had buildup of liquidity. Here, can you see that?
Yeah.
Yeah. FU through it, spike through it, and some of you got in on this entry. How did he get the link for this? Guys, who's sharing our links?
I don't know.
I'll deal with that in a little bit, but guys, please, we spoke about this yesterday.
Yeah, we did.
What's up with people? It doesn't make sense. There's a reason why why are people sharing links? I don't get it. It doesn't even make sense. But anyway. What should we do about this situation, guys? You guys tell me.
We share the link. Just talk it out, man.
Who's sharing the link?
We share it.
I don't know, but it's just stupidity going on. Doesn't even make sense. See, now I don't know who's allowed to be on the call and who's not. Do you know what I'm saying? It doesn't make it a productive work environment. You guys follow me so far?
Yeah.
I'm just gonna, how it's gonna work, yeah. If you are not able to join within the next 10, 15 minutes, I guess maybe that's the way to deal with it. We'll just lock the group. I'll just lock it. Anyway, it's locked anyway. You can't enter. It goes through a waiting room. Yeah. So what I'll do today is I'll have a spreadsheet and I'll have it on a Google sheet and I'll want everyone to write on it what your Discord username is and what your Zoom username is going to be. And if it doesn't correlate, then you're not allowed in the thing because this is only for our team. Yeah.
Perfect.
That's I think that's the way to do it. But guys, again, we had this lengthy discussion yesterday, and it hasn't even been 24 hours, and then there's another thing going on. But in any case, so from a weekly perspective, right, we're printing what? Weekly lower highs into weekly lower lows. Agreed?
Agreed.
Yeah. So if this is the end of that weekly pulse down, because it has to end at some point, right? It can't go on forever. Yeah.
Yeah.
And the reason why I don't think this might even hold here and why gold might be swinging very far, because look, what does this look like now? What does this look like here now?
Flip zone.
This looks like your manipulation zone, doesn't it, guys?
Yeah.
This entire block looks like manipulation, doesn't it? Yeah.
There's liquidity on top too.
Yeah, now there's liquidity on top. So is that not supporting that we're going to push up into that monthly point here? It is, isn't it? Yeah. You guys following me so far?
That's basically our order block, and we can refine it there.
Yeah, we will refine that. But the thing is, before you go into the refinement process, can somebody write on the chat for me, guys? Because I'm obviously trying to do this call. Can somebody say on the chat, like we spoke about this yesterday, why are people on their madness or after less than 24 hours later, like the link for our team page shouldn't be shared? Like full stop. It's a private thing, isn't it?
Yeah. Right. That's why I said
we could be talking about on this call about anything. Yeah, I could be talking and sharing stories with you. What if we don't want that out in the world? Yeah. Now I didn't record yesterday's team call. The reason why I didn't record it is because although it was a very good call and a lot of you enjoyed it, there was some stuff on there that we were talking about really personal stuff. I don't think guys want that on the internet, right? Yeah.
Exactly.
Not everything is there for the world, guys, right? It's all about being an adult and mature, right? And our goals are ready to have, like, we've all got phenomenal goals, right? You, Raymond, yourself have been a professional basketball player, right? Baseball player,
baseball player,
right? Yeah. So you know this when you played for the Yankees and you're in the locker room. Okay, some things were allowed to be public in the media, but not everything. Do you know what I mean?
Everything,
not
they
everything,
have a limit.
right? There has to be boundaries in place, so there's a level of comfort, and then the people who are part of that organization feel free to interact, learn, and grow. That's what we're all here for. Yeah. I'll upload this call for the world tonight. Yeah, because the thing is, guys, like, not many people can do what we are doing right now on this call. NAS 100 call, right? Gold obliterated from the buys here, sells. You guys took buys here yesterday, and then we just took on that scale and entry. But we're also showcasing is we're not perfect. Yeah, we don't get everything right, but what separates us is we learn from our mistakes. You guys follow me so far?
Yeah.
Can somebody write on our Discord page who's John, because he's trying to join our page, the team call? Obviously, someone that should be there, I can let them in. But who's John? Yeah. So what we're talking about before that nonsense, EURUSD, right? So yeah, it's just about having a kind of gold futures. I'll talk about the gold target in a second for you guys while I was looking at 1844 as a viable target. But does everyone appreciate why this weekly lower high might not even hold? Because even though it's weekly structure now, it's actually part of an inducement zone, isn't it? Agreed?
Agreed.
If you look here again on the
might just create a higher high in weekly.
Yeah, so the monthly structure point actually initiated from here, didn't it? Yeah. Or if you want to say, if you say, I think the structure point initiated from here, actually, the monthly, if you look at the, yeah, so if you go here, this was the push down and this was the higher low on the monthly to create the internal higher high, right? All the way up here. So this is the range on the monthly that we're playing in, okay? Based on that, we are most definitely in part of some sort of manipulation picture. So, and that's the reason why I don't want us to be selling EURUSD right now. The thing is with EURUSD, guys, in terms of a pair, it only has a range of, I don't know how many pips. It's a very fractional range. Like I think it's 30, 40, maybe 50 pips a day. So maybe you guys can tell me better, right? But it's not really worth scalping for 5 pips on Euro USD.
Facts.
Like you're managing a headache for 5 hours for 5 pips, and you might not even close in profit.
And you probably not even get the 5.
What's the point? Do you know what I'm saying? Yeah, it doesn't make sense. So that's why I want to have a macroscopic view of a technical picture as well. So we got now a lot of liquidity. But let me just, because later I'll have to delete this. So let me just mark it as I'm doing this in real time. So we've got this area here. So obviously, you know this now, right? What is this? Flip. Agreed? Yeah. There will be a sell-off that happens there to come into what? The next lower high, or maybe an inducement here to push up into greater zones here, and then continue that monthly lower high pressure. You guys follow me so far? Yeah. I'm really thinking Euro USD is going to come up to the monthly landmark over here now. For real, guys. Yeah, I don't think this weekly landmark will hold. Okay. Now I could be wrong. Okay. But isn't the whole world going to be seeing this weekly structure point? Like that? It's not, if our institutions, our retail traders, whatever, are they not seeing to sell here? Because they're seeing a lower high into a lower low.
Right.
So why would they want people in this move? Yeah, this worked out for everybody because it was part of the manipulation. So they're actually enticing sellers to sell here. Yeah.
Right.
And we, as a team, we took that daily sell here. I think I shared that publicly as well. But they're wanting everyone to see this structure point because people don't zoom out and know that this is manipulation, and the manipulation zone is just going to get clean through. There's too much liquidity sitting here, right?
Yeah, it's too many.
You've got to remember,
Equal
institutions are
highs.
holding this for long term until it comes down here. There's so much liquidity here, right? So the area I'm really looking for gold, I mean, Euro USD to go to is 1.20800, this kind of level here. Okay, I haven't refined this yet, yeah, but it might be coming into that wick here first, 1.2050. It's not a bad target from here, right? Some of you guys are in from the bottom, okay? But this kind of region is my area of interest now. And again, there's liquidity into higher time frame POI. You guys follow me so far?
Yeah.
Yeah. And therefore, once this pushes up, if this is pushing up, then we can't be selling on gold long term. I'm saying we can take intraday positions for maybe 50, 40, 60 pips, hard TPs. But long term, from a technical framework, we got to be long term buyers on gold. Do you guys not think? Yeah. If you guys remember, gold did not start ripping until Euro USD did what hit his appropriate level of demand in the market. Now, on the weekly, it looks like it hit the 50% imbalance. Obviously, another reason why it came into this zone is this not a key area of support and resistance?
Yeah.
Yeah, resistance, support. So it's an inducement zone. Within that inducement zone, the more specific area was this FU kind of wick, that this internal architecture which just collapsed against the wall. This is an FU candle on a lower time frame. Okay, you guys can see that. Can you guys see that? It's an FU candle on a lower time. Again, not many people know that fact, right? It's a hidden POI, and it's important. But you need to understand when price hits an imbalance. Okay, it ain't just hitting an imbalance and ripping off it. That's not, the imbalance is not the reason for price shifting the opposite side. Yeah, if that was the case, why doesn't it fill all of the imbalance? Why does it prefer 50%? Has anyone ever thought about that? Yeah, the imbalance is obviously where money is injected, so they created volume through that gap, right? However, it's more to do with left of price, what's going on here. Yeah, so there's that. So for long term, I'm looking for this manipulation zone to be clean through. Okay, so price is just now in a complex pullback until it reaches these lower levels here. Yeah, because we've shifted that weekly bullish architecture to bearish architecture, which is also now part of that monthly bearish picture. You guys follow me so far?
Yeah.
Yeah. And I think this will work out okay, to be honest. I'm not afraid that something dramatic is going to happen, that Euro USD is just going to die from here. It's like, it just looks like it's ready to shift. And Euro USD doesn't move until it's at its appropriate levels. It's one of those pairs that doesn't give you false reactions because the pip range is so small, right?
Right.
Yeah. Right. So let's move on to gold. So now from a Euro USD perspective, dollar is weak, right? And obviously we haven't come into the area of supply and demand in the market. And don't get me wrong, guys, at this area, we will have a sell-off. 100% we will have a sell-off. Why? Because sell volume will come in here because people will see lower highs there. However, it will simply go to external structure that was built here and create a next high.
So we basically going to trade the inducement.
Yeah, we're going to trade the inducement down if you want for 80 pips, right? Then you can buy the external structure and push through the liquidity. Yeah, don't tell me, and nobody in the world can tell me, that what I'm talking about is not happening. Because if you look at, where's my US30 chart yesterday? I don't think anyone took this entry in the world yesterday. Yeah.
I did.
I know you did, but I don't think most people took this entry, right? Unless they're support and resistance traders, then they're in this trade because they're seeing the key zone. Yeah. But that's what I'm talking about. You have to, the market is not just about understanding key levels, your key structures. It really is understanding about where the market participants are getting in and out of the market. If you understand that, the game is cracked because you know when people are being enticed to buy and sell. And therefore, if you can understand that, and the banks understand that, and the institutions understand that, then you know what they're trying to do. Yeah. That's the understanding of intention, right? Market intention. Okay. So I think gold has hit a key level, 1800, right? Again, hit a psychological level, right? Psychological levels do, again, give you reactions, don't they? Do they not? Because people are trading them, right? Agreed? No. Yeah. So people are trading psychological levels as well. That's why at psychological levels, you have buyers and sellers coming in to inject some volume into the market. It does happen.
Right.
Yeah, that's why you got a sell off at 1800, because psychologically people are looking at this level and thinking, oh, gold's been pushing up. 1800 is going to be the level that produces the turn. You see what I'm saying? Yeah.
You said it yesterday.
So there has been some volume that came in. There's been 30 pips worth of volume from 1800 to 1797, or 23 pips of volume that's come in. So that's quite a significant amount of liquidity in the market, right? Now, people say we can't see liquidity in the market. Yeah, I've been thinking about this since last night. Okay, let's challenge that thing. You can see liquidity in the market, right? Because you see obviously the Asia highs, the daily highs and lows, but is there not liquidity sitting here now? Because people sold the psychological level of 1800 and it moved a 30 pip, 23 pip to the downside. Yeah. Somebody can go online and calculate how many lots it costs to move the market 1 pip on gold. Yeah. Does somebody want to Google that now? And what comes up? What are some of the answers?
100,000 lot size.
100,000 lot size, right? For one, was it 1 pip? Is it 1 pip? Is that 1 pip?
Yeah.
Yeah. So they moved it 23 pips. Yeah. So it's taken them 2.3 million lots of volume to move the market from that psychological level of 1800 to 1798. Okay. Yeah. It's quite a lot of money there, isn't there? Do you guys not think? 2.3 million lots. Jesus. It's a big trade. That's a big, there's 2.3 million bit of liquidity sitting at the high, isn't there? Am I wrong, guys?
Yeah. That's what the central banks is giving.
That's how you can really objectively measure liquidity, right? So you don't need an order book if you understand that. Yeah, that's the math on that, really. Yeah, and it's quite neat math. So if you ever want to work out how much liquidity is in a zone, yeah, literally look at the reaction from that zone. How many pips was that reaction? Multiply it by the number of lots it takes per pip for that for the asset class to move. I don't think anyone's teaching this on the internet, right? Because everyone's in the delusional plane that we can, like, retail traders can't measure liquidity. Yeah, retail, you can't see that. Like, no one's putting on here, there's 2.3 million bits of stop losses here, because you've got to work it out. Yeah, the banks might have something that show them this, right? They talk about volume, right? Volume in our thing can't be used. Yeah, I agree with that, because you don't have everyone using the same feed. That's the problem with that. But you can measure real-time liquidity in the market, because how many pips has it taken to move this from here? Can somebody write on the chat who the hell is John, because he's still trying to join this? Yeah. So now you know, right? Every reaction that you get along the swing, okay, when price is swinging up like this, right, and you've got a long-term bias on this, right? Every micro reaction or every big reaction that you get in the market is either because traders are entering for some reason. Agreed? Like 1800 here. What's the reason people entered at 1800? I mean, let's break it down. The first thing is psychological, right? They see that psychological number of 1800 and they go from the psychological school of thought that 1800 is going to produce a shift, right? That could be one reason. Another reason, let's look at some other structures that were here that were inducing people. So over here on around 1800, what have you got? Imbalance, haven't you? And you've got a last buy to sell zone with that IFC. So you've got smart money traders coming in here without confirmation stepping into the market as well. Agreed? Mm-hmm. Yeah. Also, you might have some trend line traders here as well, depending on how they've drawn the trend lines, right? Yeah.
Yeah.
Yeah. So you've got trend line traders stepping in here. So that 2.3 million worth of transacted volume here in terms of lots, okay, it can be any entity in the market. It could be an institution, it could be a bank, it could be anyone. Yeah, just because they're a bank doesn't mean they trade a refined approach to the market and they understand what's going on. They often, the big institutions, they trade with trend lines. Yeah.
They do.
You guys follow me so far? Yeah. Just because a bank has so much money doesn't mean they have a refined approach to the markets. It doesn't mean that at all. Yeah. But how can we exploit these levels, right? Well, we can exploit them to our advantages, right? Because I'm talking about now, remember when I spoke to you about yesterday when we were in this US30 buy, and I was doing this with you guys in real time, and we on that call came to this POI here, and I said we'd get a sell-off, and it happened, right? So if you're in a position on, and I'm talking about this in terms of psychology, when you now go on to trade bigger lots on your accounts, because at that point, you really need to be objective if you're going to hold a swing, because by this time over here, you're up how many pips on US30? 300, right? 346 at volume. What's going to be your objective reasons for holding this trade if it gives you a pullback? Yeah. If you can understand where market participants are stepping into the market, you can objectively reason or rationalize in the moment, okay, I'm still good to hold my buys. Yeah. It's a real problem letting go of good trades, but how do you deal with that problem and break it up to the point it's a non-factor? It's because you start recognizing key levels, something's going to happen. I even said to you guys yesterday, 34,600 is going to give a reaction. Did it not give a reaction? Because again, it's a psychological level, and also you've got structures being built here. So you had a lower high creating that lower low. People who see that lower high do what? Give you a reaction, right? So you got an inducement sell, and guess what I did this morning? I took that buy. You guys follow me so far?
Yes.
Yeah. When you think of the market like that, trust me, guys, the market becomes a place where you can really exploit to that next level. Yeah. Yeah. You could have taken the sell as 3,600, by the way. All it required is you understanding you're at a key level of support and resistance. People are looking at this as a lower high to lower low and whatever, and you can trade that retracement into external structure right here and push up. The same thing I'm saying, we're going to go on Euro USD. When it pushes up here on that weekly point here, or this weekly lower high, you know, by all means, trade that retracement Yeah, with everybody. Trade it with everybody. But guess what? You're going to get out external structure and slam everybody. Yeah.
Right.
You're going to hunt their stop losses. Yeah. I gotta take a breath of air sometimes some of the stuff that happens on our team. It's kind of just crazy. But in any case,
We gotta respect.
bro, it's like we spoke about this yesterday. Yeah, we're all here to grow and work together and build a team together. If that kind of nonsense happens, yeah, and I'll let you guys decide what should happen to that person this time, right? And I hope everyone will be in agreement that that person can't continue to be part of our community because, you know, again, like I said, we could be talking about personal things. You could be sharing a personal story and somebody just joins the page. Is that appropriate? Not really. Yeah.
Yes, that's not a
And then
problem.
in the long term, guys, you guys, like, this call is going up on YouTube. Yeah, the whole world's gonna see what we're doing here. No one is showcasing ever. And no one out there is talking about how market participants are interacting at each level and why you get sell-offs at those points when you do, or buy-offs temporarily. That's what creates the impulses as a trend is fluctuating. It's not because price is building higher highs and higher lows, it comes to a support and resistance level and this drop. It's because that people see that support or resistance level and they want to interact with the market at that point. Yeah. If you don't understand this, right, there is no way you can exploit the market in an up-down fashion. You can't. You just don't know what people are being induced, right? You just wouldn't have known this morning on this sell here that on this US 30 sell here, if you got in, that you can't hold this long term. See what I mean? So those people that sold here, that's the problem that they run to. They're holding for a longer term position and their stop losses get hit to base entry. Am I wrong?
Right.
Yeah.
They either broke even or
yeah, they break even. And guess what? That's detrimental as well. Right? They're up 200 pips. They broken even. What's the emotion they're feeling now as a trader?
they everywhere now. They looking
Frustration. They're on tilt. So if you guys play poker, right, there's something that happens to a poker player when either a player is like heckling them, right, and like
I'm a poker master, bro.
yeah, it's a good game. It's a good game. I have played a few times, but
That psychology in poker is.
Oh, it is. It is. You know that as well, right? But the markets are
I
like
learned that from my grandpa. He was the master.
psychology in
He used to win games with back cards, and I'm like, why you keep holding? And he keep telling me,
Hey, think
his
about this.
psychology is weaker than mine.
Yeah, think about this. Yeah, poker. There's 5 cards in play, and I think every player, correct me if I'm wrong, gets 2 cards, right? Yeah.
Right.
From those 7 cards that are in play between you and the poker table, and everyone was around. Look how much psychology goes into that. Yeah. Now expand that out into the markets and what we're talking about here. Like the market is not 7 cards, is it? It's more complex than that, isn't it? So if in poker there's so much psychological interaction, right? What people are doing, what do you think is happening on the markets on a day-to-day basis that are producing these moves? Yeah. The cause of these moves isn't a specific structure in time or anything. These moves are caused by market participants interacting with the markets because they're being forced to see something that the market makers want them to see. Yeah, right. Key support. They already know where to build these structures, right? The algorithm already knows ahead of time to build these structures there. You guys follow me so far? Yeah.
Yes.
They get built there for a reason. That's why trading is not a gambling thing. It's actually what you're doing as a trader, what your goal as a trader is to understand the intentions that are being created on the markets day to day, right? Minute by minute, hour by hour, and how you can exploit those intentions. Yeah. But in order to do that, you need to have the proper framework. Now, I've put it already out on the internet that this framework is there, right? But it's going to take letting go of people's egos to go and utilize that, right? First of all, people are going to have to let go of their ego that structure is not important. And that, do you know what? Trading is all to do with can somebody write who's investor Marwan on our team? Is he allowed to be on this? Pretty cool. Yeah. Appreciate that, guys. You guys can do that for me because I'm talking to you, right? yeah, you're gonna have to let you go of your ego. And I think you had this experience, right, Raymond, when you saw the video and you went away and did structure analysis, right? Has it not made a world of difference to your trading? Raymond, are you there?
Yeah, I'm here.
Yeah, I saw your chart this morning, right? This one here. Like, how are you executing this trade? Because you have an appreciation of the structures being built. Agreed?
Yeah.
And you've written that down here. So people are going to have to really let go of their egos and say, right, trading, if I want to execute and make money, right? And guys, look on the right here. I'm not making this up. This is almost 2,000 profit running right now. It's not to do with like the sexy bit, which is the end, pressing the button on the screen because you understand, oh, I can see an IFC that bloody WWE taught me, and that's the reason why I'm getting shifts in my trades. Or it's not. If the IFC was the cause of movements, why is this trade over here not hitting IFC and just pinged up? Yeah, you know this as well. And when it comes to the extreme structures, it doesn't always hit the IFC.
Right.
It doesn't, right? If and that's the problem I had with that approach. I'm not saying it's not a powerful tool. It is. The IFC is a very powerful structure, right? So credit to those guys for doing this. And guys, people misunderstand this, right? I knew about the IFC months ago before the content was even leaked. Everyone on the team knows that. Yeah, because I already had started thinking about that a true order block at the time wasn't to do with just the color of the candle. It was to do with the injection of money that came in, which was to do with imbalances. Yeah, people got wind of it late when the content was leaked, whatever, right? But in any case, a true point which leads to a shift is not even to do with that. It's to do with, for example, as we discussed, it's a twofold criteria, right? You've got to have liquidity being grabbed left, and also that thing has to go and break a structure on the downside. That's the true zone of liquidity. That's what you're trying to find. Yeah.
So that's a true order
True,
block.
true zone. That's the true zone. You're not looking for like what is an order block? Like the word doesn't even like make sense, right? Maybe a better definition would have been order book, right? But actually, it's a point of you're finding the liquidation point in time where the banks got involved. That's the key.
Right.
Yeah. It's nothing to do with IFCs or this. They are just tools within that zone that price mitigates sometimes. Yeah. If it was fact, it would be 100% of the time. Yeah. If
Exactly.
Wyckoff,
Sometimes I have not taken trades because I'm keep waiting on the IFC to be touched. Sometimes you
yeah,
just go and
this is a
there's
real issue for, I think, their community. And there was a big issue for them, for the guys that were being taught that material. I know this for fact, that they couldn't just execute trades because they kept waiting for M1 IFCs to get hit. Yeah.
right.
It doesn't work like that. The M1 IFC is just a zone within that liquidation pool, but actually the whole zone is a point of liquidity, which this anywhere within this zone, by the way, could give that trade. Yeah. How are you supposed to be God and know it's going to the M1 IFC? Yeah. If you then build a trading plan that I'm just going to trade the M1 IFC, okay, but you're not really going to get a deep understanding of price. Yeah. In any case, you shouldn't just be executing on higher time frame POIs as it is. And again, guys, that protocol that we go through is on the internet. Like I leaked the team call on purpose. Yeah, to hell with it. Yeah. Let's see if people can utilize that knowledge. Yeah. Let's see if they can do it. And the thing is, they won't be able to do it because the thing is, they'll focus on the sexy stuff, the entry, they'll forget the foundational concepts. And I know this from my personal experience. When I don't focus on the core foundation principles that are part of your trading plan, i.e. structure, how to refine your higher time frame POI, lower time frame POI refinement, right? How to even find the POI in the first place. What does price have to do criteria-wise when price is hitting your POI from a higher time frame perspective and a lower time frame perspective? What does it have to do? Yeah. Once it does that, what does your entry criteria have to do? Yeah. Is there a time in the day which supports that trade? Yeah. Now we're even going refined, right? Do you know what? I'll take our trading to that even next level. Once I get the grasp of the fundamentals, right? And I start watching Bloomberg a bit more and whatever, yeah. Trust me, we'll be able to swing trades for miles, right? Because like I said, in the course of a swing, if you're purely relying on a technical approach, yeah, psychologically, you cannot handle a swing. That's why swinging is hard. But like I said, on GJ, for example, the reason why I said yesterday that it was going so long is because there's something fundamentally going on that's driving yen weaker. You guys follow me so far? And that's being reflected on the charts that you see. So all the important charts are reflecting that sentiment. So your US 30 chart is going up. Yeah. Your dollar index chart is collapsing. Agreed?
Agreed.
Yeah. Now, just because you see this, and if you don't have an appreciation on the fundamental side, you just, even if you want to hold the swing, like it's psychologically such a burden. Yeah.
I mean, you've been saying it a while that the dollar index was going to collapse.
I said this before. I think there's a breakdown on the internet of this. Nobody.
It is. That's why I'm saying it. That's
Yeah,
all.
nobody believes it, right? But again, how do you know that? It's again to do with structure. You're in a bearish environment. You're bullish, right? You broke bearish, and then you've got internal downtrends being created. So, the long term, right? This is only and the point here is to know when you're in a continuation versus are you in a trend? Like what's pro trend and what's counter trend? So pro trend is actually to the downside. Yeah, all of this movement is counter trend to the daily pressure. Are you guys following me so far?
Yes.
Yeah. Guys, I'm not making this stuff up. Yeah, and again, my approach is getting more refined with you guys, and your results are showing. Okay, I don't share everything with the world that happens on our team because the thing is, it's hard, right? Whatever, and there's not really a need for it. But I just look around me, like some of the things you guys are doing as a team on our page, like what Ben took, that GU buy on a 2.1 pip stop loss, etc., etc. It's crazy, and you guys have only been doing this for not long after being coming on the team. Truth be told, right? Raymond, you've been on the team how many days? 3 days? 2 days? I don't even know.
4 days today. And
4 days today, yeah.
I already have taken trades like 3 bip stop losses, 4 bip stop losses.
And forget
my boys, they don't believe me. They think I'm lying.
Forget the 2-3 pip stop losses, yeah? Because the thing is, everyone can hit a 2-3 pip stop loss every now and again. But what's the consistency in your account? Yesterday, you were up 17% or 18%, I read, right?
But today, I'm up 38%.
38%. So again, guys, when people say their communities are doing 1 to 100 every day, yeah, let's slow that kind of statement down, yeah? If everyone doing 1 to 100, trust me, everyone on that team is buying bloody jets and flying off to Paris and doing stupid shit.
Yeah.
Yeah. There's the risk reward that you see that you can chart on the screen, yeah? But how can you manage that position in real time? Trust me, not many traders can hold their full swing through a position. I know that because I go through the same psychological problems. Am I any different to anyone else trading or interacting with the market? No, right? So if we're going to have to take our trading to the next level, we're going to have to find approaches to the market to deal with that problem. What are going to be the approaches that once we're in a good position, right? Like once we're in a gold buy from get gold buy from 1720, 30th of September. It's only been 2 weeks, by the way, in time frame, right? Can many people hold this for 2 weeks? They're going to have a very hard time, right? Even if they have a very strong view against. Yeah. Why? Because no one's really broken down what's the technical and mindset approach you need to have when you start swinging a position. It's true, right? Yeah. And you're going to have to develop that. We're going to have to solve that problem as a team. And the world is going to have to solve that problem because once you get to the point where you understand structure and you can get to the very bottoms of swings and pick them apart, right? Because you're following that process from higher time frame, lower time frame, structure, whatever. You have entries at the bottom of swings. Am I wrong? Yeah. So what's going to be your approach in the market when you have the entry at the bottom of swing to guide you and to make that psychological burden less? That's what I'm talking about. How to reduce that psychological burden in your mind that you can rationalize and justify holding a trade. Are you guys following me so far?
Yeah.
Yeah, because again, yesterday, when we were in this US 30 buy, the reason why this hold has become so nice and fluid and easy is because what? Because you understand here, that's where participants are interacting to what? Sell the market. And you know, they're just being induced. And every time you get a minor pullback, it's just going to be so they can create liquidity and push price higher. Does that not ease the psychological burden on your mind? why price is going from here to here. Because again, guys, this is a 2-day hold now, right? This is probably to the end of today. Agreed?
Agreed.
Yeah. Does that not make the whole process of
It might
swinging?
just push up and drop later on
Yeah,
today.
we'll have to see what happens here. But again, guys, this is not a small trade on US 30, right? Do you know Q Banks, right? He's made fortunes trading US 30. And do you know how many pips he gets?
Millions, bro.
He gets 200, 300 pips on those moves. I'm talking about monster trades, 800 pips. Yeah.
Yeah.
Can you guys update? Can anyone objectively tell me if this is a small trade in relative terms? 773 pips. Not really, right? Yeah. How many lots does it take to move 1 pip in the market? 100,000, right? We've got how much money has gone into creating this move? 700 times 100K of lots. What is that number? Let me do the math on this. So 100K, a million, 10 million. You got 700 million, I think.
$17 million.
70 million lots has gone, 70 million, I think 70 million lots has gone into this. Yeah, 70 million lots. Okay. That's a lot of lots. Do you guys not think?
Right. That's why he be driving Ferraris and Lambos.
70 million lots have gone into creation of that move. Don't tell me that this is a small move, guys. It's not. And this is what I was saying. As a team yesterday, right? We have that ability with now the knowledge and how we're piecing all the bits of the puzzle together, right? And obviously, you guys know I'm doing team calls with you guys every day, right? I have a vested interest in everyone's like doing well in this team, so we're doing them every day, right? And also, it's helping me to talk through ideas, take trades with you guys, and do it in real time, so you guys see that okay, if I'm struggling, okay, I need to pick apart. And I did get some messages from someone that they were struggling. So again, guys, I'm being completely transparent. Not everyone on our team is going to get the stuff straight away. It's impossible for me to say, well, you come on the team and like you will get the stuff straight away. You might not, because it all depends on what your previous background was in trading, right? What you had learned before, because these are really advanced concepts. Agreed? There's basic from the basic structural points, but when you start piecing it together, and that's what it's about, when you start implementing on a professional level, how do you piece that information so it meshes? It can be complicated, okay? But most people, if they put the time, and again, Ben is the example in the team currently, he wasn't really charting last week until I broke down how to refine higher time frame POI, lower time frame, and then he's been on all the team calls. You can see he hit a 2-pip stop loss on GU. So the point is, once you break up the process and say, which bit am I struggling with? Do I understand structure? And again, I keep on that structure. Do I understand? The reason, guys, I focus on structure so much, right? As the thing is, as price is progressing through a trade, it's going to create new structural points. Agreed? As US 30 is progressing here, it's creating a new structural high, isn't it? You need to appreciate what time frame is being built and what time frames are left, that if those time frames break, you can write on the right of your chart, okay, now H1 is bullish. You see what I'm saying? Yeah. If you don't,
that's what I was doing with GU.
Yeah. If you don't appreciate that, then this, well, I mean, you're like shooting blanks. Yeah.
That actually what really helped me held that trade was watching the structure points change each time frame. I would just put them on the side. GU changed to a bullish market, 15 minutes, 30 minutes, 4 hour. So I was like, I'm holding.
Exactly. And guys, these are all things we have to think about, yeah? Because the thing is, these are real life problems for traders. Yeah, we can't just say, okay, right, the problem is, oh, swinging is just a hard skill. And again, swinging is becoming a bit of a lost art because of all this intraday stuff that's going on in the industry, that everyone wants to be an intraday trader. What was the trend before? It was swing, wasn't it? If you could do
trader, yeah,
a swing for like 400, 500 pips, you were like considered a really top trader. Now it's people have kind of got lost on this intraday stuff. Yeah. And the problem is, you can't be an intraday trader if you don't understand structurally what's going on and how structure interacts across time. How? Because intraday trading is all about getting in at the right time and getting out at the right time. Agree? How can you know that? You can't know that, one, if you don't understand structure across time. You don't understand where people are being enticed, so you can actually sell with those people here, for example, right? And catch a little retracement and then buy up. See what I'm saying?
Yeah.
Yeah, like how you can, and again, guys, intraday is still something I'm working on. We all are working on as traders. Like no trader is perfect in the world. Yeah, if you at that point get to the point in your like education that you feel like you've conquered it all, you've done it all, there's no more to learn, right? You will get humbled by the market. You will, and I think all the top traders adopt this philosophy. I mean, it's with everyone in that top. And forget traders. Think about someone you admire. It could be any field, right? Basketball, baseball, American football, whatever, English football, Formula One. Think about any person at the top of their profession. Do they ever stop trying to learn and improve on their craft?
Nah, they keep going.
Nah, Kobe Bryant retired early because of his bloody Achilles, but God rest his soul. But before he got into that tragic accident, I think he was still going to his daughter's basketball games.
He was creating an image for female basketball players.
Yeah.
Be big. Like he started that trend.
So the passion.
Now Nike is like helping with that, but Kobe, it was the whole thing. He started that because of his daughter.
Exactly. So you can't lose the passion for education and growth and whatever, right? If the criticism is out there that yes, we as a team refine and improve our approach, then like, are you guys like, is the world just completely lost its minds?
But
Like
not just Kobe Bryant. Look at the
innovations.
Michael Jordan.
Yeah.
Netflix.
Innovations like core to who we are as human beings, guys. It really is. If we never innovated, right? If we never improved, then as a species, we would have died down a long time ago. It's true.
Yeah.
It's true. All the amazing things you guys see around the world. And guys, I don't really speak often like this. Sometimes I do. But again, it's kind of good to rationalize the markets in terms of a real life perspective because it makes it more understandable. It doesn't become just something that you interact with to try and make money or not to make money. Yeah. This is going to be your work in the future. Yeah. Everyone on this team, hopefully, will go on to the point where they become a professional trader if they choose to do so. Obviously, if you still want to carry on your job, to do it. Okay. But if you get to that point, right, this is your life, right? This chart here is the thing that gives you money, right? Supports you, whatever. So it's not good enough just to understand I have an imbalance. It's not good enough to understand, higher highs and higher lows, right? It's not good enough to understand I have an IFC. You have to understand the deeper interactions of the market. You really do. Yeah. And at that point, once you start getting to that point of understanding, trust me, the market becomes more interesting for you. Doesn't it? Because no move is then unexplainable. You can actually go back and see what was the actual reason for that move happening. Okay. And the level I want us to get to is the point where we understand every impulse and every pullback and why it happened. Yeah. Have you often wondered before, right? Like, for example, price is coming up here. Why at this level here, you got a minor pullback? Yeah. Why didn't it give a deep pullback here? What was the reason for that?
Inducement.
And now you know it, right? You know that they created a downtrend here. And because they, on a higher time frame, they had just liquidated this manipulation to create the anchor point for this leg. This now became an inducement zone. This was an inducement sell, trap volume here, push through. Yeah.
Yeah.
Is the market some weird kind of thing? And guys, again, these are things I used to think like, why is that a weird bit of structure in the left? Is it even structure? What is that? It is structure, but it's more deeper than that. Yeah. So you have some really powerful models at your disposal. Okay. You have the new model of appreciation of the manipulation cycle that happens when all structure points get created, major structure points get created. Okay, it happens. So this H4 point got created on US 30. There's a manipulation zone, right? There has to be, because before they can create the next high, they're going to have to take everyone off the board, right?
Right.
Why do only 1% of traders make money in the world? Because everyone else gets cleaned off the board at some point. Yes, right. Yeah.
Yeah.
Powerful stuff. It really is. Okay, guys. Let's just check up on some other trades. So gold again, guys. it's progressing beautifully, isn't it? Yeah, you shouldn't be panic selling this. You know, at 1800, we discussed it. You got the psychological sell, and we agreed 2.3 million put worth of liquidity came in to do that. And now you even know how to calculate liquidity in the market. Okay, so it's not like you can't even work out liquidity. How much liquidity created this move? Simple, 100,000 lots times how many pips it moved. Simple. That then tells you how much liquidity is sitting here. Okay, now if you think about it that way, does that not become a powerful thought?
Yeah.
Yeah. The how much
powerful.
How much price had to move away? I mean, how many move? I think this is from the high to here, right? It's almost 91 pips. Wow. So 91 pips times 100,000 is what? So it's, I think it's 9.1 million. Okay. So 9.1 million lots interacted here. Right. And I'm not even, and this is the lots to just push it down. I'm not even talking about the interaction where people coming in here, and it's probably more than that. But the impulse down, if you calculate it, and there's grossly 9.1 million lots of transactions being pushed there. Am I wrong, guys?
Nope.
Yeah. So how much liquidity is sitting at that high? 9.1 million. Yeah. If you wanted to calculate the liquidity sitting here, you do the opposite, right? And you work it out, right? It's from 18. Let's do it for you guys. 9.1 liquidity. You got 855, 85 lots. So what would that? That'll be 8.5 million. Yeah.
Yeah.
And maybe this is this is something you can study, right? You can maybe do some back testing on this. If there's I don't think it's to do with that, but anyway, if there's more liquidity on the upside and downside, which side are they going to take? The upside, right?
Yeah.
Yeah. But I mean, that's just the idea I'm throwing out there. I want us to utilize the other ideas about higher time frame, confidence, structure, fundamental picture, fundamental makeup. Yeah.
I mean, now that you talk about fundamentals, Joe Biden says that he's a week ago that he's not afraid that the dollar will collapse for a little bit. So, but you already had that analyzed on the dollar index that it was going to drop.
Yeah. Yeah. Yeah.
Yeah.
Again, guys, yeah, structure is the key, man. I can't frame it enough. I can't frame it enough, guys. Honestly, you saw the result of. And again, guys, when I did the USD JPY chart, I wasn't really looking at this as a long-term hold, because the thing is, on a weekly time frame, if you look at it, we were creating that weekly lower high, but I misread this at the time when I traded this, that we had shifted weekly into bullish, higher highs and higher lows. So again, guys, swinging for me now is becoming a bit of a lost art too, because I've been so focused on this intraday trend that's been creating the market. It is really a lost art, but you got to build processes while you're holding that trade. If I had looked at objectively at the time, okay, dollar is collapsing, it's about to collapse, probably would have held this trade longer. Yeah, because now you've got the confirmations to ease that pain when you have this pullback here. Yeah. Right. That's what it's about. It's not about here, because the psychological burden, like, even if you had 4 lots on here, which I think I had 4 lots, the risk on this trade, on this entry, was only $80, by the way. And by the way, when it was up here, this position alone was up 4K. So risking $80 to make 4K, what's the risk reward on that? I think it's 1 to 50, right? Which was what it was, right? So you don't have to risk a lot to make a lot of money in the markets. But at that point, if I had thought about things more clearly, and sometimes I don't, right? Sometimes I have that same issue everyone else does. You don't think clearly what's happening long term. But in any case, it was a beautiful trade across both entries with 1 to 9. I'm not mad, but we're trying to take our trading to the next level, aren't we? Are we not?
We are.
I'm not being satisfied with the 1 to 90 across both entries there. I'm trying to see how the output on that trade could have improved. Okay, same thing. Lewis Hamilton goes on the F1 track. He doesn't just come back after his practice lap and be like, I just did the fastest lap on the thing. Nah, he's like, how could I cut 0.01 off that fucking corner on the next go? Do you know what I'm saying?
Right.
If he's working around millisecond time frame differences and improvements, yeah, why is our ego so big enough we can't go back to our good or bad trades, analyze them, and see what we could have done better? I'm not saying you have to journal, right? Maybe it's a good, I don't really journal that much, but it's not about just journaling, right? It's not just about opening up a diary for the sake of it. So I can say to the world 2 years later when I become successful and show them an Instagram thing that this is wow, look at me. This was a journal of all the trades I took. Yeah, that's not the point of a journal. Yeah, the point of a journal is to sit there and think, right, this trade went well. For example, in this trade, what was the reason it went well? Okay, what are the things I did correctly? So you're gonna have to then know for the higher time frame, I read the structure correctly, and this was the structure story from the higher time frame. Then on the lower time frame, I found the correct POI because I marked out the external structure, and guess what? I found this H1 or M30 last sell to buy zone, and for me, that was a point of interest, and also that one. Okay, so when price came here, and then it met my H4 criteria for the higher time frame POI criteria, that we had internal liquidity, we had some Asia low liquidity, and obviously we were below the base. That met more my criteria. Then when I refined my 30-minute time for a block and I found the actual, again, this liquidity left here, can you guys see that, right? There's liquidity grabbed, I refined that into an M5, M2 zone, right? And then I saw on market open that week, when we were going to our approach criteria before the entry criteria, that we had liquidity or inducement being built that was captured to do the FU, right? So then when I went into my entry protocol on the lower time frame, things were just looking so crystal clear and beautiful, and I could execute a 2.1 pip stop loss. And yet I had some anxieties about this trade because obviously USD JPY is a very slow pair, right? I have a very strong bias on this, that this is going to hit this area here. But despite that, throughout that swing, I had to withstand a reversal of almost 50 pips, which is 50% of the move. Okay, how did I deal with that? Okay, when price came here, yes, I was so happy my TP got hit and I had just done 1 to 90 across both trades, but I'm not satisfied because guess what? USD JPY next week went up another so many pips. How many pips did it go up?
100.
160. Okay, so that's not a small difference. Yeah, how can I improve my output next time so I can catch this move in a much greater? And again, guys, this is a USD JPY entry coming now, right? This is a high over here, right? Created liquidity, sorry. Liquidity, and you can see, again, fine left here, liquidity being captured. Where's the last sell to buy zone? Here, right? Yeah, right there. And so we haven't really come into it yet. Guess what it's creating right now? Liquidity, yeah? And guess what part of the cycle we're in now? So manipulation zone, liquidation, FU. Are you not taking this entry with me, guys? I'm taking it. Why not? Fits all our criteria. We're dollar bearish. Sorry, USD JPY we're dollar bearish and yen bearish. So they're both bearish at the moment, but relatively to each other, the yen is the weakest kind of currency in the market at the moment. You guys follow me so far? Yeah.
Yeah.
They're both fundamentally weaker and technically based on the other pairs we're looking at, but when they both interact, so this is the problem people have trading USD JPY is because when US 30 goes up, both the dollar and yen are relatively weak, right? Yeah. But what is the relationship to each other? Okay, so that relationship is currently the dollar is a stronger one of the Japanese yen. So again, guys, does this trade, and again, this is only the 15-minute thing, right? Let's refine this thing further. Yeah. See, when you follow a process, guys, there's opportunities everywhere. I'm telling you, yeah, and you guys are on the team page a year ago. I never used to do this, guys. Yeah, because my processes weren't that refined. But now I don't really care. You can load up a chart of USD Mexican peso if you want. Well, have a look at it. But at the beginning, it's going to start with structure, yeah, to build that story, right? Remember we did that USD CHF breakdown with one of you guys on the call? Yeah, we can do that stuff, right? It doesn't really scare me or faze me anymore because all it is about, yeah, for me now, follow that 10 or 12 step process and let the market take care of the rest. Yeah. If this trade flops here, do you know what? Okay, but you followed everything. External structure is here, external higher high, and then obviously liquidity into here. Yeah. So this was your M30 zone, I think, M30. So let's refine that even further. So this higher time frame zone. Again, I get kind of lazy with stuff. I forget to write this stuff, but you should really do it But you guys see the point about journaling and thing. Journaling is not a quick thing, by the way. I mean, it can be quick when you type it up quickly, but it's not a thing where you just put one screenshot and be like, I took a trade and it was a 90 to 1, and that's the end of that. Okay, but how are you going to get the next 90 to 1? Do you know what I mean? Because if you don't repeat the same consistency, your account doesn't go up in a smooth the curve. It does that. It does all of this. It goes down. And then you're like, shit, I need to wake up. Wake up call. Let me follow my process again. And guess it starts getting smoother again. Guess what? And then you get complacent and you get lazy, and guess what? It goes down again. Right. And you're like, shit, I gotta get my shit together. And then it goes up. Have you guys ever had that experience in trading? You make some money, yeah, you get complacent at the top when things are going well. You stop following your process, and guess what? Your equity curves drop. You lose money, right? You're like, shit, I'm losing money. Time to focus. Time to follow the process. It goes back up. Yeah, guys. If it happens to me, it must be happening to a lot of other people as well. It's not just me that's happening.
It happened to me all the time.
Yeah. You hit a good trade on gold, 400 pips. Guess what? Yesterday we did as a team. We're forgetting what the bigger pictures are. Okay. And that sell, by the way, wasn't a bad sell. It was a beautiful sell, end of day, 70 pips. But you got to have some hard rules when things are in trending markets now from a high time frame perspective, that if you counter trend after a strong impulsive drive, hard TP in Asia, because the Asian range is only 30 to 50. That avoids the problem I had this morning when I'm in the trade and I wake up and the thing is back at entry. I'm like, oh shit, I missed 70 pips last night. Damn these markets, they're after me. Do you know what I mean? And guess what it does to your psychology? You're like so mad, the next trade, you're trying to FOMO into it. See what I mean?
Right.
So you got to be aware, even when things break even, how they affect your psychology and how they interact with your psychology. Okay. So where in the manipulation picture are we on USD/JPY, right? We create a new impulse, right? Let's do the fib on this. Fib on this. Yeah, 60, 70 inducement level, right? Again, yeah, perfect. FU topside, FU downside, again, come here. Yeah, and over here, you can look for a generation of equal lows here. And now, it doesn't matter. And again, it doesn't matter if you miss this trade here. Guess what? We're about to take the next entry. Isn't that beautiful? Yeah. Guess what's
Yeah.
as well? Liquidity as well, right? So again, inducement happening.
Low too.
Yeah, guess what? Do you know what? If you wanted to really show off your ping-ponging skills, yeah, do you know what you can do? You can go lower time frame, trade that lower high structure and do this kind of madness right now, right? Trade that lower high on what stop loss is this? And trade it up to here. There's a 10 to 1. Am I wrong?
No, you are right.
Yeah, am I wrong? You can do that, yeah? But again, guys, it goes back to structure. If I don't have an appreciation of what's external and internal, you ain't ping-ponging nobody here. Yeah, you ain't no ping-ponging nobody and no one. What's up with that?
Sorry, cutting you while you're talking. I think personally, I've discovered one thing which I'm presently working on now.
Mm-hmm.
I think I have issues with lower time frame structure. If the structure is on 1 hour, I'm good to go. If it's on 4 hours, I'm good to go. But anything lower than 1 hour, I think I'm now having issues with it. What do you think I do in that instance?
Well, if you're having problem with structure on lower time frame, yeah, we got to break it up, because again, guys, you know how I feel about this. Structure is not to do with when we talk about the topic of structure. Okay, let's say we talk about. Let me show you. Write this down so it's neat for the world. Yeah, structure. When you talk about structure, yeah, and the most rudimentary level, what are we talking about? The highs and lows. Agreed?
Highs and lows.
Yeah. Within that structure now, we developed that straight structure framework. Then you got to know the anatomy of the impulse. And that video is up on the internet, by the way, right? What do I mean by the anatomy of the impulse? When you actually get the creation of a high, yeah, from that low point here, what's the features of that impulse? It's not a featureless thing. Yeah, so you have within that impulse, you have internal. So if this is H4, you might have M30 higher highs and higher lows, creating that high. Okay, yeah, so creating that H4. That point at the top is a dual point. It's an M30 high, right? Because you had M30 internal, and it's also what a H4 high. It's a dual point of structure. Okay. So that's important because when we then create the next H4 higher low, right? H4 higher low, right? The trend here has to shift M30 bearish, okay? Or M15 or whatever, until we get to that H4 higher low. It doesn't just stop there. The anatomy of the impulse doesn't stop there. You got to mark out, and then this is developing that anatomy of the impulse further into that manipulation model of price within the impulse. Okay, are you guys following me so far? Yeah. What are the features of that manipulation model? So when you are creating that H4 higher low for the next impulse higher, what actually happens in that process, right? Creation of that manipulation zone, creation and spiking through to the downside first, spiking through to the upside, come down into deeper zones, and then you shift. Are you guys following me so far?
Right.
Yeah.
We also will look for that shift in the lower time frame.
Yeah, and then it's about it doesn't even just stop there. It doesn't even stop there. That structure knowledge, right? Then you got to know how structure interacts with time. Structure interacts with time. So when you have, what I mean by that, when you have a POI on a lower time frame and you're looking for a shift, you have a downtrend coming into it. Agreed? Yeah. When it comes here, you need to mark out what these important higher time frame structure points are and what time frame is presenting them. Because when you then have a shift here, you need to know which time frame has shifted. Yeah,
exactly.
If this is an M30 shift, you know it's significant. Yeah. If this is a H1 shift now, you know this is very damn significant. We are significantly now bullish.
Right.
You guys follow me so far? Yeah.
Yep.
So if you're struggling with lower time frame structure, I would really consider this, right? You're probably still struggling with higher time frame structure, okay? Because structure in the core essence is nothing to do with time frame you apply it. You're actually struggling with the idea of what structure is. Yeah, how you have internal structure creating landmarks here, internal shift over here, lower high to lower low, bearish market. Now I can sell the market. Manipulation picture, FU, bang. Yeah, that's the manipulation mode, right? But in core essence, you're struggling with when trends shift. That's what you're struggling with. When the market shifts from bullish to bearish market dynamic, that's what you're struggling with. And that idea on US 30, by the way, this structure breakdown is not simplistic by any stretch of the imagination. Do you know why it's not simplistic? Yeah, look what the stuff I spoke about. So daily higher highs and higher lows. I recognize even within that, you got a manipulation picture, liquidation, anchor leg, push through, right? No non-structure, internal here, external, right? The external higher low. Agreed? Yeah. Pushes through what? This is the shift from bullish to bearish, right? Yeah. Within that, you have what? You have your manipulation picture, right? Manipulation, spike down, thing. That's how I know now we're ready to shift higher. Yeah.
Right.
We've completed we've almost come to the end of our manipulation cycle, really. Yeah. Now we're expecting a new high because we've done the manipulation down, manipulation up, spike through. Now you got the true anchor for the shift because again, it's in liquidation. Look at this. The market is just crazy. Look at the points it took liquidity, created that block, which then shifted price. So you have got a true anchor in price. Yeah. Then we come on lower time frame and my work's not done yet. I need to understand because this trade's gone. If I'm going to get into a subsequent trade, well, we're about to print a daily higher high. The daily higher high is not just going to print from daily structure, is it? Yeah. Because daily is external now, right? The daily structure is going to be once you create the anchor, it's going to be lower time frame structure. But then again, I need to go back to my principles. I need to work out what was the structure leading into that anchor point. It was M45. Can you guys see that? Yeah, when M45 shifted, we've got M45 what? Higher high, which is now a H1 high because they share the point, right? So now you know you are H1 bullish. Is that not significant? Yeah, it is. And then you guess what you do. Even that H1 impulse created lower lows and lower highs, agreed to create the H1 higher low. When that shifted internally, H1 internally was bearish and now become H1 what? Bullish. Yeah. Now what landmark is this? So again, guys, this label, this is a H4 point in time. Broke it, so now H1 was bullish. What's H4 now? Bullish.
Bullish.
Yeah, so all of this nonsense in the, not nonsense, it's not nonsense price action at all this stuff in the middle is a internal downtrend to do what? Create the higher low, right? Externally. Yeah. Guys, if somebody looks at my chart, can they read everything I've just said here? Can they explain what I've just said? Not really, right? You can't.
Right.
You can't, because all it is all of these labels are essentially, they're it's just a reminder for you what's going on. So when I speak to you guys and when I come back to this chart, I have a quick trigger that, okay, this is what's going on. Because obviously every day you don't remember the chart you looked at before. Yeah, because you're managing like 6-7 different charts at this point. Are you guys following me so far?
Yeah.
Yeah. So again, guys, that breakdown here. So then it becomes about the current impulse. And again, I have to work out where are we in the current impulse cycle. Yeah, we made a new external points here. Yeah, we're trading between these external points here. Yeah, internal. Yeah, that was the higher low. This is the lower high, lower low. We shifted bearish. So now we got manipulation picture, trading within the manipulation picture to then get our, you know, we traded this buy. I just misread this, that this was not in the, I didn't think this part was measured, because that sell is tradable. Yeah, it's like what's happening on dollar yen at the moment. And then you get that nice buy on the flip zone. Now we look for the sells, come in here. Yeah, guys, what's done on this chart, yeah, and again, guys, it's an 800 pip trade. Don't take this lightly. There was 23 million bloody lots that went into this move, even more. By the time this comes up here, this is how many lots? This is 80 million lots that have gone into this move. Yeah, it's not a joke move. Once you get to the skill level where you have, when you start dropping Q banks, there's lots on these trades. Trust me, you've made like 4 or 5 million on a one trade. Yeah,
on a regular basis.
Trust me, guys, that's the level. That's the level we're pushing for. Yeah, QBank's ain't gonna be the only one this time next year. Trust me. But showing $1 million trades on his bloody accounts. Trust me on that. Yeah, the only difference here is if you look at his entries, he's buying at inducement points and only taking. I'm saying only. There's still good big trades. He's trading 200, 300, 400 pips at a time. Yeah.
Right.
He's not able to capture 800,000 pip moves at will. That's what you guys got to understand. That's the difference in the level that we're trying to get to. And it all happens because, again, guys, this took me, when did I do this? So this, and the breakdown, by the way, is up on YouTube, guys. If you are struggling, go back and review it. Yeah. I think Ben once I showed him and broke it down for him on the team page. Trust me, he hasn't messaged me to ask me, can I have a one-on-one or can I do, and again, you guys can ask me for help. Yeah, it's not always possible because, again, the point here is, guys, I'm spending 2, 3, 4 hours every day with you guys now, right? If you guys are on the call, if you guys are reviewing it, why like, if you need a one-to-one, it then becomes to me that you're not going away and doing the work. If you are then going and doing the work, then by all means, hit me up for a one-on-one and we can get on a quick 30-minute, 1-hour call and we can go through it step by step, yeah? But, and again, you're entitled to ask where you're going from because I'll point it out. So like you the other day said, I'm struggling. Somebody said, I think it was you again, said, I'm getting taken out early and the stop losses are being hit. And I said, well, let's dissect that. And that was probably a problem with the part of the protocol. So not the higher time frame, you were doing the lower time frame correctly. You're probably reading structure correctly. But the bit before you go into entry criteria, that was the problem, the approach into the POI. Yeah, you weren't waiting for that equal lows liquidity to be created into the POI. Yeah, once you fix that day or that evening, you told me you took the sales and the buys on USD CHF, right? Which is phenomenal. Yeah, so there is a way to break down where you're struggling with. If you're struggling and still can't get structure, guys, you need to look at where they're right on the gold chart. Where right? I think I deleted it, but anyway, structure is just not simply structure. There's different components into that structure, like framework. There really is. Yeah. Where's our USD bloody JPY trades? I'm waiting for that. I'm gonna get into that trade with you guys. Dollar yen, crazy animal. Should we trade the inducement down on a 3 pip stop loss? I mean, there's 30 pips to grab here. Why not? Should we do that? And it comes up here. So let's look at this. So again, to find the block here, liquidity was here. This was all this liquidity created. So again, this is the last block here, last buy to sell block here. Focus on this area for entries when this comes back. I mean, it's so stupid. You can even take the buy here for 6 pips if you really wanted to. If you really wanted to, you could. I mean, I wouldn't advise it because, I mean, trading 6 pip ranges ain't really my thing, but why not? If you really wanted to, if you do some back testing on it, you could. I mean, this has to go up because on an M1, it's just shifted that internal pressure here. It has. M1, yeah, I'm not creating lower lows. Yeah. You want to catch 6 pips there? You can, we can, why not? Once it comes here, we'll take the sells here. Again, liquidity into POI on a fractal nature, FU through it, bang, take the sells into, again, you've got to recognize which side, part of the cycle you're in. So you just did the manipulation portion. Now you're coming into lower zones here. Okay. Yeah, so that was it. Yeah. Yeah. Any questions, guys, before I wrap this up? It's been a bit of a lengthy one, but I think we got some good ideas on there on the call. I hope you guys will agree with that. So again, guys, I'll upload this call on YouTube. You guys can review it. And yeah, keep grinding, keep pushing. Yeah. The question you have to ask yourself, yeah, and this is again why most people can't become mentors, is because like when things get like slightly hard, you just don't think like, where is the issue I'm facing? Okay, like where is the actual source of my problem? If it's the entry protocol, you need to refine. You need to think, if you're foaming into your entry, I mean, that could be a thing as well. You need to think and go back, right? What's my actual criteria when I'm entering the market? Now I'm talking about execution. You're gonna have to look at first how you define the liquidity. I'm going to even change the name of this whole order block business because I think it's not appropriate. Yeah. I don't even think it's appropriate to call it an order block, because the thing is, when I call it an order block, I think of something completely different. Yeah. It's actually point of liquidity. It's point of institutional liquidity. Yeah. Because that's where they pushed up. It's the institutional liquidity point. That's what it is. I don't see it. I don't think this should be called an IFC. The IFC is the bit there, yeah. But what's actually going on? The word and phrasing should be a function of what the hell the thing is. But in any case,
to be honest, I think it's better if you call it a different name, because I also
because again, yeah, when I think of order block, trust me, my mind starts looking for different things. It forgets it needs to follow this criteria of liquidity point F, liquidity grabbed, then the BOS to the downside, right? Guys, I'm not making this up. You could have taken a trade here on a 2 pip stop loss. Why not? Let's do it. Let's ping pong this on a mental, like, you can do this. I mean, so 1 to 1.7, but if you want, you can. Right?
That's 6 pips.
6 pips at 100 lots is something, right? So you can do it. You can do it. But you have to go away. And I know someone's just joined late, but this call will be up on YouTube. So we discussed a lot of new stuff on this call. I'm sure you guys will agree. So it's all there. But if you ever get stuck, guys, again, I don't have a mentor. Yeah, who on the team can I ask for help? I'm sure I can ask some of you, right, who are becoming more senior and whatever. But when I have a problem, like my issue was just like my GJ, whatever, and I explained that, right? But it's like, how can I find a more sophisticated approach to swing the market? Like, it can't just be based on, oh yeah, by the way, I got the entry at 1720 and let me just hold it. Because the thing is, psychologically, your brain doesn't rationalize that thought process. Yeah. So we discussed on this call, Obviously I had to think and be like, what are some of the things I can do? And that means now I need to go and get a better grasp of the fundamentals, right? We'll start watching some Bloomberg, and it's not like I never watched it. I watched it from time to time, but I never thought fundamentals were like that important in my trading. But obviously now, from a swing perspective, if you don't have a fundamental appreciation, then you can't swing the market at ease psychologically. Am I wrong, guys? Yeah.
You're completely right.
Yeah. Now, it doesn't mean you listen to everything on Bloomberg and you stop thinking for yourself. Yeah. Because remember when we did the NFP breakdown, what did I say? I said predicted last month's values were what? 200 and I think it was 220K. Yeah. 232K. Correct me if I'm wrong. Right. And they had projected 500K. And I said, guess what? This is clear manipulation to a dollar to the upside, because there's no way in hell they're going to come out with 500,000 jobs this month, because the average historically, empirically, and this is all objective facts, I'm not making this up, it's 200,000. The number was what? 192,000. I'm not God for doing that.
That's a really good fundamental analysis. Like, I didn't know that.
Yeah, so the reason, guys, the thing is, I don't, it's kind of, I need to be more professional in my fundamental approach. I don't even have the economic calendar up on my screen. How bad is that? Do you know what I mean? I should have it up, but the reason why I didn't really go into the fundamentals before, and again, guys, I told you guys in the call yesterday, I explained the process, how we got to the methodology at this point today. It's a shame I couldn't record that call, because maybe I should have shared it for the whole community, but you appreciate the journey that it's gone on from being Wyckoff, trying to understand supply and demand, a structure, input, then the order flow ideas came in, then the daily cycle ideas came in. But at that point, if I had started focusing on fundamentals, it don't make no sense, because I don't have the technical framework to understand fundamentally what's going on. Then I would just get manipulated on all sides. Because the fundamentals would be telling me one thing, my chart appreciation of market dynamics and where market participants are entering is just not there. So I'm really just confusing myself with more data points. But now that we appreciate the market to a higher level, I would say, a much better level, then we can do that, right? It's at this point, it's appropriate, I think, to add the fundamentals. But the thing is, if you go from a fundamental approach and have no technical framework, okay, you might understand yen is weak. Where are you going to enter the market? That's what the banks do, right? They use that approach and have really wide stop losses. So they accept a major downside if it happens, because they know over the long term they'll make money, but might be holding drawdown for months or days or weeks. So we're trying to reduce the drawdown and try to increase precision from an entry perspective, because we have a much better appreciation of the fundamental sides. And so our USD JPY thing is entering. Let's see what happens.
You're gonna take that 6 pips.
Should have taken that 6 pips.
I'm telling you.
I'm telling you, 6 pips at volume. That was done.
Jesus, bro.
It's one trade after another, innit? Do you know what I mean? And like sometimes, obviously, people don't know the ins and outs of the team and what goes on, because it's impossible to share everything. But it's like one trade I share goes break even. It's the end of the world. But they don't know, like, there's certain days we're hitting trade after trade after trade.
Yeah. They don't know that, though. They
don't know that. They only
can see, they can only judge you of what you've shown.
Yeah. But we're going to change that narrative now, so it's going to be fine. I'm not really too concerned, but I think it's time to shut out the noise of the whole industry and just say, guys, right? I know there's perception in the industry. You think lit is the end all be it all in trading, but guess what? We were doing lit before lit was a thing. Like, out of that whole community, the only one who could do intraday trading, it's a fact, was Reem at the time. Well, Carl Wally and Alex had to tell me they knew how to do intraday trading before. Kind of fucking nonsense, Now they can go make videos on the internet and be like, oh, intraday trading, Who taught you? Reem, nothing wrong with that, But let's not get it twisted that somehow I was mentored by WWA. Like, physically, for that to happen, I'd have to pay for the fucking course, and then they would have to sit on a screen and do it. And has that ever happened? Not really. So It doesn't make sense. If somebody can arrive to their own conclusions, by the way, which because I have a brain and everyone on this team has a brain to figure out, because the market, if you watch it enough times, and I've explained this goal will go up. Like, look at the approach we take. It's not even anything on the internet. I don't even think the lit curriculum goes into that much detail about where market participants are operating or all the stuff we spoke about. In any case, yeah, can I just get one of those boys to be on a live team call with one of their with a team and take one trade one after the other? It just ain't gonna happen.
Nah, they ain't doing it.
They ain't doing it because they don't have the approach to do it. Everyone can show a trade in hindsight and retrospect and cherry pick examples. Yeah. And on this team call, by the way, I'm not just spoken about successes. I've spoken about, I was in the GJ trade from last night. And guess what? My psychology at this point over here, because it's the end of the day, kind of got screwed up. And I forgot to remind myself that obviously the yen is weak. So I'm looking for sales here and I get clapped. Yeah. So I'm not talking about successes. I'm talking about like, forget the ego thing. I'm here to improve myself. Yeah. If I had the goal, and this is a real personal goal for me, guys, I don't know about you, is to by the end of next year be managing an 8-figure portfolio. I can't be managing an 8-figure portfolio if I don't grow as a trader.
Right.
What am I going to do when somebody gives me 8 figures? Do you know what I mean? Like, it's a different ballpark to play in. At that point, when you start managing 7-8-figure funds, guys, and you get to the fund level, right? You're going to have your processes refined, because the thing is, if you lose 20% of the fund's money, trust me, that's an issue for investors, right? Yeah. At that point, your processes and your approach to the market has to be solid. Like, you have to have a process. Like, once you're in a position, how am I going to swing this position? Yeah. Now tell me who out of the whole world taught me to think about this. Anyone? Did Wakar, Wally, and Alex come to my dreams last night and be like, oh, Erti or Ali, this is what you're going to have to think about? Do you know what I mean? No. Yeah. We're professional traders, right? That's what we're trying to be. This is our job. It's our job to think about these things. We're not dummies on the internet just pressing buttons. Yeah. If I get stopped out on a gold buy or a gold sell, do you not think any of you, like in common sense terms, right, unless you're not interested, will think, well, why did that trade collapse? Yeah. So gold buys this morning over here, we tried to take it. We got a reaction here last night, and I think Ben tried to take it here with me this morning, and we got a bit of a reaction. Now we can go away and think, okay, right, we weren't looking back at the fundamental drivers from a higher time frame. What's going on? We got liquidity on a higher time frame. Dollar index is tanking. USD JPY is going up, etc., etc. Euro USD is headed for that thing. Now we can understand and appreciate long term. We should be holds on buys on gold, and that was just a manipulation sell. Yeah. We all have brain cells, guys. Like, you don't have to go to a mentoring program to figure this stuff out. Yeah. And I don't care if they say this, right? And they react to it because it's the truth. Yeah. I'm kind of tired of all this narratives that get built around myself and the team and this, that, and the other. People are going to know the truth now. They really are. Yeah. But I'm not seeing those boys show up in the last week since all this commotion is starting up and show me one bit of live trading in real time. Yeah. I don't care about hindsight and 1 to 10s. And by the way, guys, do this for yourself and for the whole world on YouTube watching. Yeah. Put 1 to 10 for a compound calculator, which supposedly Reem is doing every day. Yeah. Because apparently he's the most perfect trader in the world. He's got all of his shit nailed and he can trade the market through his perfect execution every time. 1 to 10s every hour apparently being shown. Put that through a compound calculator, right? By the end of the year, guys, you're the richest man in the world. I'm not joking with you guys. That's the maths of it. Yeah. You tell me, is Reem the richest guy in the world? Because last time I checked, it was probably Jeff Bezos or Elon Musk. I don't see Reem on that fucking list.
Jeff Bezos is the richest.
Yeah, do you know what I mean? It's so if somebody's hitting a 1 to 10 every bloody minute of their life, why are they sitting with WWE? Why are they not on a bloody fucking island sipping margaritas and Mai Tais? Do you know what I mean?
That's marketing, bro.
Again, guys, nothing wrong with mentoring. I said yesterday, mentoring is one of the reasons that when I mentor and teach you guys, I trade better. When I've been talking about trades with you guys today, if I'd come to the charts today and I'd just gone passively, like it just wouldn't have made sense, right? Like, as I'm thinking of a passive thing, but because we're talking about trades together, you guys are communicating, whatever, we're thinking trades. There's nothing wrong with mentoring and building a business, yeah? But you don't slam the rest of the industry because you're apparently showcasing 1 to 10, and because people don't understand, because they're not professional traders. This is the point. They're not professional traders. They don't know, if you're professional traders, what things you have to struggle and go through day-to-day basis when you execute a trade, when you manage that position in real time. It's not simply a fairy dust thing. At the end of the thing, you walk away with a 1 to 50 on a USD JPY or a 1 to 90. There's something that's gone on even in this entire process. Yeah, and obviously you guys that join late can watch this call back and review what we've been talking about, right? It's not the whole process of trading isn't that you just enter the market and you exit with a high risk reward strategy. Yeah, if that was the case, their entire community, trust me, would be millionaires and billionaires. It hasn't happened. Yeah, but I know from I know, right, objectively from my team and our team, right? When people come to the team, yeah, it takes them, if they put their head down, 3 or 4 weeks to fire and get this stuff, and they're consistently making money. You already heard it earlier today, right? Raymond has been on the team. He's already made 35% on his accounts. Yeah, 38% on your accounts, right? So it's like, can we all just be realistic about this, right? There's no, and again, guys, people on the outside who are not professional traders will never understand this. They'll see the numbers being thrown out there and they'll get clipped into it. Yeah. Now, here's what I have an issue with this whole thing. You cannot shift the market cap of the mentoring cost to such a degree where everyone else is doing 2,000, 3,000, 1.5K for mentoring, and you suddenly say, our knowledge is worth 10,000. Are you guys on crack?
Nah,
not everybody. On crack. If you value your time, right? And again, I posted about this. People don't understand this. They've got 5 traders running that business now. Wakar, Wally, Alex. There's a few other people in there. So the reason why it's gone to 10K is because the profit's been divided by 6, 7 people. It's nothing to do with the value of the knowledge.
Exactly.
If it's to do with the value of the knowledge, we have the same fucking knowledge, and I'm sure other people in the world do too. Yeah.
Yeah.
You can charge whatever you want. That's not the point. But the thing is, when you shift the market from, I'm not, and I said yesterday, you got to separate me as a trader, me as the person running Sniper Effects, and me and the person in real life, right? As a person who will be your friends and listen to you and take care of you, whatever, right? There's 3 different entities, right? I'm not talking about me as a trader here, right? I'm talking from a simply business perspective, right? If Elon Musk tomorrow creates a supercar and says that car is priced at $5 million, $10 million, right? Do you not think Bugatti is going to have an issue with that?
Hell yeah.
He'll call him up like, yo, you Lamborghini's gonna be like, yo, what are you doing? Do you know what I mean? You cannot shift the market cap to such an extreme. When anything is done in an industry, right? And the industry we're talking about is education. I'm not talking about trading. I'm not, because we dispelled it, right? If any of those boys or anyone in the industry can say, I'm consistently doing 1 to 10, 1 to 50, blah, 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 consistently, you're the richest man in the world. I'm not even saying I'm doing that. You know what I mean? I'm talking about mistakes that I've made in real-time trading, on trades in real time when I manage them, because again, guys, on the course of my lifetime, I'm only in year 2.5 for the rest of the lifetime I have to trade. To say at this stage, I've got it all nailed perfectly is just suicide, right? And also you never will get it perfect, because any person at the top of their field, and I don't even know if I'm at the top of my field or at the top of the potential, right? Let's be all honest, right? Is ever going to stop refining their craft. And I gave several examples on this call, right? Lewis Hamilton, whatever, right? It just doesn't make sense. So, and I'm going to upload this call, right? Because I think it's time for the industry to have a wake-up call, right? It really do. And I even spoke about this. Professional traders lose money, right? All the guys, Lambo Rahul, as even said it on his YouTube, I alluded this to yesterday, right? Go watch his videos. Last 2-3 months on last quarter, he was in drawdown. Yeah, no professional trader throughout the whole year can keep that kind of intensity up. It doesn't happen because your body's not designed to sustain that intensity. Yeah, right. But from a pure business standpoint, when you shift the market cap so far right, yeah, I'm gonna have an issue with it. Yeah, because then when people look at that, people think, right, they don't really think these things through. They think, hold up, so Ali's team, he's charging whatever 1.5, 2K to come on. He recently done a promotion for 200. Over there, Lit are charging 10K. What's the deal? Is their stuff more valuable than our stuff? Well, not really.
They team just got bigger and they have to divide up.
Yeah, that's issue number one. Number two, then is it about is there a difference of knowledge or whatever? Not really. I don't think in terms of knowledge bridge gap, I don't think there is, right? And obviously on the internet, we know every person in this world that's trading? No, there might be a version of you or I somewhere else sitting in Japan, China, America, wherever, by the way, who doesn't have a social media presence. Okay.
Yeah.
He's figured out the same stuff because the thing is everything's on the charts. Yeah. He hasn't gone to a mentor. He's just sat there looking at the charts, failed a bunch of times and been like, okay, this doesn't work, that works. And then eventually he's pieced it together. Yeah, not everything's like surrounding the main entities in this education space, whoever they are.
Just here in New York, bro, if you walk through Wall Street, you will find a bunch of traders that they don't even be in social media, but they live in a $20 million penthouse.
That's what I'm talking about, bro.
See what I'm saying? That drives me nuts. I'm like, bro, you should be doing this and that. I'm like, nah, I don't like exposure, blah, blah, blah. I'm like, damn.
It's everyone how they live their life, right? What they want to do with the thing. But the thing is, when you shift the market cap to such an extreme degree, and I didn't even know they were charging that much until somebody told me, but it's just, you got to hold up and listen. Yeah, because then the blowback comes on everyone else who's actually doing a decent job with their communities. Do you know what I'm saying?
Yeah. They're gonna try to jump.
Now, let me tell you a funny story about this whole marketing thing. Right? One of the recent students who joined, I know him because he's friends with someone on the team. I think Johnny, that you guys see, right? His mentor. He was claiming that he joined WWA recently, and I kind of not went in, but I had a conversation. I was like, listen, right? I'm never gonna respect someone who's apparently running a hedge fund, going off, and his trading is already really good, by the way. If he's at hedge fund level, apparently 200 million assets under management, right? Why does he need to go to lit to learn? Okay, there's nothing wrong with refining your knowledge, right? But if your knowledge, you already have that foundational framework, you can think for yourself. And guess what the truth of the matter is? He hasn't paid them. Yeah, well, Carl's already friends with them apparently, and he's let them on for the course for free. So any review that's coming from him on Instagram or whatever, it's going to be biased anyway. Yeah.
Right.
Let someone normal, right, who hasn't got 10,000 and let's actually put their life savings, pay 10K for a course like that, and let's see what the result is, because that ain't going to be a biased view of events. Yeah. When something is free and you go and do it, of course, you're going to have positive things to say. Yeah. For sure. There was a really arrogant post this morning that I saw. It's just like, I'm going to take the day off, but I might go hit a 1 to 100. What kind of smoke is this? How do you know you're going to go and hit a 1 to 100? Like the market, whether you're going to hit a 1 to 10, 1 to 20, 1 to 30, doesn't depend on your like perception of the market. It depends
You said it yesterday, bro. Ego.
Bro, it's just stupid. It's getting to the stupid level, yeah? And the thing is, this video, I think, is going to kill it all because people need to realize, yeah? First of all, let's talk about what it means to be a professional trader. And let's talk about what the struggles each person has to go through and that journey everyone has to go through to be a professional trader so they can start managing bigger lots of capital. Yeah, it just doesn't happen like that. It's not fairyland, you know what I mean? I've already dispelled the win rate percentage is one of the most lousiest statistics in the world, and everyone who's retail focuses on it. Yeah. But in any case, I'm very happy with where things are on our current team. I'm very happy with everyone's progress, and I think we're growing phenomenally together. So we're just going to keep pushing so far. But I'm going to call it time on this call. This one will be uploaded. So anyone, any thoughts and feelings before I wrap this one up? You can talk about it. But yeah. And guys, I never really do this, and most people on the team know this. I don't really do this, and people are going to be like, well, NASA blowing FTMO and whatever. I don't think it is. I think the equity is over the what you start off with, right? So I don't normally do this, but sometimes I get like fed up of it, and it's just like, I'm not taking the trades that I'm sending you guys. Can people just rationally think about this statement as well? Okay? If I'm on the charts till 2, 3 in the morning after being on the charts every day, why am I on the charts at 3 in the morning if I'm not taking those trades?
Exactly.
Like, what am I doing? Just trying to do something and trying to compromise my health at 3 in the morning. It doesn't make no sense. Yeah. So we'll call it time there, guys. This one will be uploaded. There's obviously we spoke about a lot of stuff, but I mean, it's all good stuff to listen to, really. We went through a lot of chart work. I went through a lot of chart work with you guys. We went through structure. We went through, again, the principles of identifying where market participants are interacting. We took some trades. We took the gold buys. I spoke about Euro USD in detail, why I think is going high into that monthly point, because now this weekly block is manipulation. Okay, so this weekly block isn't going to even hold. Okay, so, and then we're monitoring USD JPY currently. I don't think it's ready yet, but we'll have a look. And that's it. And then we spoke about GJ and what's happening with that. So lots of important lessons from this. Learn this one. This one will be uploaded for everyone, so you guys can review it. And again, there's been some drama on the team. We're going to have to address it. Someone's been leaking the link. I don't really appreciate that. I don't think you guys don't appreciate that. So that needs to be addressed on the team going forward as well. So those things are streamlined, and those people that are entitled to be here are here. Yeah, happy everyone?
Yeah, everything is nice.
Perfect, guys. So
About to kill this New York market now.
Perfect, guys. So I'll catch up with you guys very soon.
See you, bro. Take care.
Enjoy the rest of your day, guys. Bye-bye.